Hi guys, today it's our lesson 5, support and resistance zones, continuation of our lesson 4 liquidity video. So if you haven't watched this one, I highly recommend go back and watch it. And before we start, all my market breakdowns, my day-to-day analysis, and everything I do is live in my Telegram. It's first link in the description down below, so definitely join it. And now let's get into it. So today's support and resistance zones, guys. Every trader talks about them, but some people still draw it wrongly. Today I'll explain the theory behind it and the way I mark them down on the charts. So to begin with, let's talk about support zone. And it's a price area where the price reverses direction due to aggressive buying. This is where demand dominate supply. Price doesn't go lower from this level, it kind of bounces up. Buyers step in aggressively here. So buyers are not letting sellers to break through the zone. And yeah, once formed, it kind of acts like a floor for future price actions. And resistance is complete opposite. It's a price area where aggressive selling happened and price reversed downwards. So supply overwhelms demand here and zones become a ceiling if we're talking floor and ceiling concepts that price struggles to break through. Very important thing some traders don't know about is that zones flip roles after an impulsive breakout. So when price breaks support impulsively downward, that support becomes new resistance. So kind of like think of it as the floor transforms into the ceiling. And when price breaks resistance impulsively upward, the resistance becomes new support. So the ceiling, it becomes floor. This is called the mirror role change. One of the most important concepts in technical analysis, in my opinion, if we talk liquidity-wise. And it might seem a bit overwhelming now, but once I show it in the chart, it will be way more simple. So what it actually works is breakout signals is a major shift in the balance of power between buyers and sellers. Market participants who sold at resistance, they might now want to buy back at the same price level, which has now become support. And same psychology applies in reverse for broken support turning into resistance. So some key points to take from here is not all zones are equal. The more time price tested the levels, the stronger zone is. Second is you need to analyze multiple time frames simultaneously. Zones marked on the higher time frames carry significantly more weight, something we talk about weeks and equal high and equal lows. They are way more significant on the higher time frame. And last but not least is breaking a major support or resistance level often signals the start of a very powerful trend. And you might ask, why would we need this knowledge? And the answer is so simple. Support and resistance help you predict where price will likely reverse direction. So it provides clear reference points for opening or closing positions. And it also forms a foundation for most technical analysis tools. And now let's actually jump to the chart. We have a theorem here on a 4-hour time frame. So it would be pretty significant. Oh guys, very important now is how to mark the zones. So look here, use a rectangle tool, the one you all use, I think one of the most tools in TradingView. And for support, you start at the high that created the last drop, so the correction before the impulse moves up, and you end at the low of the drop, where the impulse movement actually kind of began. So if you look here, we can see that price somewhat tried to be in the zone, and we look, oh yeah, it's an actually impulsive move. So we start at the high, and we go to the low before the impulse move. Now we just stretch it like this, and let's just stretch it up until here now. And you can see the zone? That's actually your support, and you can see how price is bouncing from here. So it doesn't actually break, it's three times, yeah. So here, bounce up, go here, bounce up, goes here, bounce up. And you remember what I told you about reversals? now that it actually breaks impulsively, it becomes a resistance. So the floor became the ceiling. And you can see how price doesn't want to go higher than this once, twice, third times. And then we can see a complete kind of fall off, and yeah, the price never breaks anymore. And guys, for resistance, it's the same process but inverted, completely the same but inverted. So you find the low that started the last rise before the impulse moved down. You mark up to the high of the rise where the impulse drop began. And this rectangle is your resistance zones. So price got rejected in the zones aggressively. So let's try to find some good movements, and maybe this could be kind of the good one. Yeah, I guess for example it's well enough. So the low, I would say it's here, and the high is here. Now we just stretch it, and here you can actually see support and resistance working together. From support to resistance, we go down. Here we quite cannot really move up. Here we made our attempt, but we can go, and at the end we end up breaking our support. So guys, practice this on your charts. Mark the highs and lows that created the corrections before impulse moves. And the more you do this, the faster you'll spot these zones in real-time trading. And guys, that's support and resistance theory and a bit of practical. It's a simple concept, but you need to mark it correctly. So start practicing and you'll begin reading charts at a completely new level and understanding liquidity at a new level too. Don't want to make it too long, guys. And I'll see you in the next one. Don't forget to check out Telegram down below.